When you trade stocks, you should never ever go off what your friend or someone else tells you. I'm a personal trainer, and I've had a client that his mate said, yeah, this stock, it's at 20 cents now, but it's going to boom. It's going to be $1.20. It's going to be $2, $3. Give him 3 months, whatever. He put $20,000 in. It went from 20 to 40 cents or something, and then crashed down to 3. And they pretty much closed their doors. So you don't want to be like that. You don't want to trade off the news, okay? Because of the time you probably found out about it, you're probably already too late, and the market's already adjusted to that. What you can trade is your assumptions and things like that, but really you want to study a lot. And this is going to be the most powerful tool that I currently know of how to do it. It's actually something that day traders use. We'll pop it up right now. It's known as Finviz. Now, like I said, day trading people use this a lot when they don't have access to a proper paid program. So when I day traded a little bit here and there, or if I just want to do a little bit more study on stocks or really be exposed to stocks that I didn't know anything about, this is a super good tool to use. So if you know everything about Finviz and you've used it before, then this video is probably not for you. But if you haven't heard of it before, stick around, because this could be one of the most beneficial things to you throughout your investing career from now on. But there may be better tools out there. Let me know in the comments below what you like to use if it is something different. But you can see straight away on the Finviz home screen, financial visualizations. They show the current market trends, which is always strong to know, because if you are, buying and trading within the same week or month and not holding long term, then you might want to look at the overall market trend, because it's a lot easier to make a gain when the market's in an uptrend. There's a lot more stocks pushing that upwards. So I'm not about swing trading and things like that, day trading. I think it's a very difficult craft to know. Long-term investing is a lot more safe and easy, I would say, is my words to describe it. That's up for debate, surely. Everyone's got their different experience with investing and things like that. But generally speaking, long-term things will normally have more chance to go up. So the most important thing is going to the screener here. Now, this is all about being exposed to more stocks, like I said. So, everyone knows what Apple is, Google, Amazon. But what about the stocks that aren't as valued as that and may have some strong growth, but the world isn't behind it just yet? So this can actually help us find them if you want to tinker around with it. So we'll go to the all setting here on the filters. Now, there's 7,545 stocks available to trade right now. And that's overall. So country here, you can see some is China as well, Canada, USA. So what we can do is go to exchange. First of all, stock exchange at which a stock is listed. And we can select like NASDAQ to narrow that down. Now we're down to 3,130. What you want to do is have a certain set criteria from these options here and narrow down your options to just study different stocks. And from there, from narrowing them down on this website, you can go onto their own websites, do a bit of Google searching, research the actual background of the business before you invest your money in there. But let's just do a little bit of a play around on this. So we've got exchange. You can search by market caps if you want massive market caps, things like that. How about we want to search for a nice, relatively safe, high-paying dividend stock? So it actually pays you to leave your money in there, which a lot of people love that idea, rather than trying to go for that just large capital growth. Dividend yield. Now, keep in mind, dividends have been punished really heavily with this year and all the lockdowns. So sometimes you would normally be able to search over 5%. And there is 183 businesses that come up here, but we haven't added any more settings here. So I bet we keep it at 3%. A lot of businesses have chopped their dividends this year, but they will go up in the future, back to where they were, hopefully. Now, overall performance, how about we do for the week up maybe, because people want to start seeing some progress straight away. And you can do 20-day simple moving averages, 50-day simple moving averages. Let's say over the last 50 days that it's price above the simple moving average, SMA 50, which means over the last 50 days it's been cruising up. Over this last week, it's been cruising up, and it gives a dividend yield of 3% or higher. Not too bad. We're down to 139 stocks already. That could be good enough for you to look at it. Now, the other thing that I mentioned before in that story of the client where he lost 20 grand or thereabouts, He bought a penny stock, so it was under $1, and that's super risky. They're super volatile. I never ever recommend buying penny stock. So we want a nice established blue chip stock if we can, because they're the safest. They're established in the world, and it's very hard for them to, evaporate and crash and burn. So price, we want over $10. Week up, over 3% return in the NASDAQ exchange. And simple moving average is in the positive over the last 50 days. Is there anything else we want to add to it? Now, if you just hover over some of these, if you don't understand the terms, you can always Google further. But generally, these are pretty straightforward if you hover over them. Relative strength index, technical analysis. That's more used for day trading to see if it's getting overbought or things like that. Current volume and everything is also what you would search if you wanted to find stocks that move more rapidly within a day, so you can buy and sell out. But we're going for more long-term investments here. Let's just do one more to get a little bit more narrow. And we've added, it's within 10% of nearing their yearly high. So if you've been keeping up with the market, the S&P 500 is about to break its all-time high, which is incredible. It's because of the tech stocks it holds within there, pushing it up so far. Because I do hold the majority of those what makes up S&P 500. But if we go a little bit below the high, now I don't recommend this one. I don't like. It's more of a day trading objective when you see a business reaching its all-time high, because people really like to get behind that sometimes and buy in to push it up. If they see it making all-time highs, then it's making big moves, right? Big moves within its own business. So it's just a nice one for now, but I don't always recommend this one. 0 to 10% below the high. And we've narrowed it down to 31 stocks. Now, if you hover over here, you see the company name, what sector they're in, and what country. You've got market cap, price, how much they've changed in the last week. I believe the change goes off. And volume is how many shares are bought and sold. So let's just look at a brief overview here, and you'll probably see some names that you know or will grow to know. Now, a lot of these are ETFs and things like that. We can also look at the valuation of them, financials, getting more into depth if you really know your numbers, or you can look at the charts for the last 3 months to see how the company's going, how the lockdowns affected them, all the outbreaks and stuff, and you can see which ones are really shooting up. Now, the semiconductor equipment and materials here on a nice upward trend there. So this is quite appealing, some of these stocks. But again, I'm not one to want to trade 52-week low and high. And if we get rid of it with 117 stocks, we'll probably see some more big blue chip businesses that we know. Broadcom Inc. Now, I'm in Australia, so a lot of you guys might know these United States of America stocks more than I do, or the businesses. Camden National Corporation, financials, go to page 2. Let's just find one. And for instance, there you go. I think everyone knows the Kraft Heinz company. Warren Buffett holds a major portion of this business, and they've come up under our current conditions here. So they're up for the week. They're up also for the last 50 days. They're in the right exchange. They have a nice dividend yield, and they're priced over $10. So going off these businesses, because I haven't done any more info gathering and research on each of them, I'm sure there's probably many good options in here. Oh, you can't see behind the screen. So here we can see the stocks here. Kraft Heinz company, I know that one, and their financials looking pretty good at the moment. You can look at their graphs, go into the actual business themselves. They're making good gains, and they have good return. Now, Kraft Heinz, I don't know if they can really pull off anything crazy. I think they're so established, unless they get a couple more different product lines going, things like that. But it's such a major business. Nice safe bet, I would recommend. But with anything stock related, remember, do your own research on it. Never listen to anyone. So even though you're watching this video on me, I hope you found some of this information helpful. If it has, then be sure to hit the thumbs up button to show me that you appreciate it, and also YouTube that it can help some people. And you can subscribe for more finance related videos. But never trade what someone else tells you. Use that research, take it in, and then go on and do a little bit more digging to make sure it matches your criteria, okay, and what you feel comfortable trading. And if you do that, you'll feel a lot more confident and also, I think, a bit more proud about your trades as well. Thanks for watching, guys. I will see you next time. Just before you guys take off, if you've made it this far, thank you very much. But if you have, then I'm happy to give you a bit more information on how I feel about those stocks. So, Kraft Heinz looking pretty strong. I would deposit money just to show you into that business right now, to show you that I do believe in using Finviz to do a bit of extra searching and putting that extra bit of effort in that most people wouldn't do in order to discover more stocks that could benefit you in the future. Now, I don't like to trade dividends. I feel like they benefit people the most if you have a lot of money already. Maybe you're a bit older in life and you've been working all those years, you have a heap of money left over, you don't want to sit it in the bank. Dividends are awesome. You invest it, not only does the business ride up, but they're using their profits and in a way of thanking people for being invested, handing out a percentage of those profits out to its investors. Great, right? You get a paycheck every 6 months or 3 months, whatever it is that Kraft Heinz, for example, do. Every business is a little bit different. Some pay a little bit monthly from what I've heard. I've never actually been involved with any that do that, but you get the idea. Now, I mentioned I don't like to trade dividends, but why? They sound so good. Well, the problem is, like I said, you have to have a lot of money, I think, to benefit in that aspect the most. And I am not one of those people that have a couple $1 million left over in order to invest. I'm trying to get to that point. Now, in order to get to that point, I truly believe that you want to buy into a business that isn't paying any dividends at all currently. It's one that you believe in, one that's, you know, a bit groundbreaking in its movements lately. It seems to be the way to go. But things like Tesla, we've seen of shooting up, are doing some groundbreaking things, right? Shaking up the world and the market as a whole. Electric vehicles and all these solar panels and things like that. And yeah, Elon Musk is doing a lot of crazy things, but they don't pay any dividends. So any single bit of profit they may make or do, they don't hand out to any of their investors. They invest in the company in order to get it to grow the highest. And what can happen in that aspect is if you've got a business going all in on themselves and you're investing and backing that, the actual growth can completely destroy any type of dividend stock in some cases, because they're not giving out their money that they've made. You know, they're trying to actively multiply the business as a whole. And then in the future, once they feel like they can't use that money in order to grow any further, then they might start paying dividends. And the capital growth you've had and then the dividends at the end, if you've got time on your side, can completely outweigh any type of dividend investing. But depends what kind of person you are. There's lots of different ways to make money in the stock market, and that's what I think what makes it so awesome, really. So with that said, I'm not going to be putting money into Kraft Heinz, but what I would recommend you do is search an ETF or a couple of different videos, okay? One, you click the card up in the corner, it's going to take you to buying ETFs and why they are the newest thing on the block, okay? Last decade or so, I'm not exactly sure when the first ETF was launched, but they are major parts of the stock market now. They are the second most traded category of stocks behind technology, I believe. They're ahead of finance stocks, and that is for a very good reason. They're very low cost fees. They hold multiple different stocks as a whole in some different category. If they're index funds, they try and match S&P 500, and that has always grown over history in the long term, or they try and fit a certain criteria. Either way, it's a collective of stocks, so it's more safe. Some of them pay dividends, so you get dividends as well, and the fees are very low because it doesn't have to be managed too much. That's a really good way to do things. I recommend that, and I think that's about it. I've been rambling too long. I will see you next time.